Good morning and welcome to this Wednesday, May 13th edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Got a good show lined up today. I actually got a couple of new segments that I want to introduce today. I'll be featuring these more often over at Stock Charts TV, but I thought I would show them first here at Earnings Beats. So I'll get into, of course, the daily market recap in just a couple minutes. Talking technically, I wanted to take a look at a big picture idea, and I've talked about this quite a bit recently. We'll get into that in just a couple minutes. A new segment, the seed, where I'm going to take a look at some small companies within a key industry group and just show you how the seed may at some point germinate and become a much bigger seed. And so I think you might enjoy that segment. Some of the things that I'd be looking for if you like small companies, really trying to find something early on that might become something much bigger down the road. So we'll feature that segment, the seed. And then another new segment, I Don't Trust You. I'm going to get into some stocks that I just don't have a whole lot of trust in. They might be making a move. They may just not be participating, whatever. I'll go through about 4 stocks there. Get into earnings spotlight, upgrades and downgrades, a couple of regular features, and then we'll end the show with 3 must-see. But we'll get into the daily market recap in just a second. I do want to mention before I get going, for all of you who are new to Earnings Beats, there is a free newsletter, so make sure you subscribe. Name and email address, that's all that's required. Monday, Wednesday, and Friday, I send out just a quick little blurb. Might be a trading idea, might be an educational nugget, but usually, these newsletters have been very well received, gotten a lot of good feedback, and so we'd love to have you join our community, become part of that Earnings Beats Digest newsletter. So let's go ahead and take a look at what's going on in the market. Well, first, let's go through the major indices here, and you can see that the Dow Jones Industrial Average yesterday fell almost 2%. There was a lot of selling in the last hour, and that's what caused the move to the downside. S&P 500 down 2%. See the NASDAQ also down 2%. Mid caps down 3.5%. Small caps down a little bit more than that. And then when we look at the industry groups, you can see real estate leading the move to the downside. It's just been an awful period for real estate. We had a decent bounce, second half of March into the first week or 2 of April. And now you can see just steady down. So even though we've seen the Dow trying to move higher and putting in higher lows, same with the S&P and the NASDAQ really doing well, real estate's been actually trending lower and just broke to about a 5-week low on the close yesterday. So real estate still not in favor on Wall Street, and that's why I would continue to stay away from the group. Industrials, can't really say too many positives there. Couple areas have performed all right. Truckers have been pretty good, but overall this group has really been challenged. Looks like it's on the doorstep of a breakdown here around 59.60. Watch that. Financials, same as industrials. And the thing that's been maybe a little disconcerting about financials is we actually had a little movement up in the 10-year Treasury yield. Financials didn't get any kind of a tailwind from that, which is surprising. Not quite sure really what to make of it. Other than I'm just looking at the chart, and as long as the XLF is under pressure on an absolute and a relative basis, I would tend to stay away from the group. There might be a few trades here or there, but for the most part, I would stay away from the group. Discretionary stocks also weak yesterday, down about 2%, close to what the major indices did. This is a group that's been better, though. We do have a double top in place. We want to watch that 110 level, make sure we hold there. Technology's been the strongest area of the market. It too fell about the same as the market. That was one of the reasons why the NASDAQ was falling yesterday. It was technology shares sold off late in the day. I don't know if it's ironic or not, but technology down 2.06%, NASDAQ down 2.06%. Just kind of following along, leading really the NASDAQ to the downside. And one concern that I've had here just recently is as we keep making these breaks to the upside, the XLK, you can see the discretionary trying to make a move. Look at their AD lines starting to roll back over. That's a little bit of a concern. It's a secondary indicator. It's not my primary go-to. For me, it's, what's price action doing? If price action's moving up and breaking out the new highs, these other things might be maybe provide a little caution or tell me to be a little cautious because they're not confirming it, but they're not my go-to. So I'm not going to look at this and say I'm going to short because the accumulation distribution isn't following suit. I think that would be a mistake because we could see simply 1 or 2 solid days closing at the highs, and you would see that accumulation distribution turn around in a hurry. So it's maybe a little bit in this kind of like the PPO, when we see a negative divergence on the PPO, but then price action keeps going up, and eventually that PPO turns higher and eliminates that negative divergence. Same thing with the accumulation distribution. So the first thing that I look at is always price action. Price action, I actually pay a little bit of attention to volume. I don't pay much attention to the volume on the overall indices because I think sometimes that can give you the wrong signals. I see a lot of folks write, well, this rally isn't good because the volume's going down. It wasn't as heavy as it was on the way down. Well, on the way down, there was panic. There was blood in the street. Folks will sell because of fear and the anxiety of losing money. I don't know too many people that panic into stocks, but I know a lot of people that panic out. So if you go back and you look at history, you will see this almost every single time. In fact, I think the bottom in 2009 was one of the first times, or one of the only times, that I've actually seen the volume on the move back up that was as heavy, if not heavier, than the move on the way down. And that was the end of a secular bear market. So I think you got a lot of institutions piling in at that point. But you can see, the volume here, and you go back again, any significant sell-off with the VIX going up beyond 25 or 30, when panic starts to set in, you're going to see more volume on the way down than you do on the way back up. It's just the way the market works. So when you see an article that says, well, you can't trust this rally because the volume's lighter on the way back up, ignore it. I'm just telling you, ignore it. Go back and look in history if you don't believe me. All right, 10-year Treasury yield. Not a lot in terms of economic reports out today. We did see the PPI come out. April PPI down 1.3%. Market was expecting down 0.5%. So much, much lower April headline PPI reading. Core PPI, which strips out food and energy, was down 0.3%, which was a little bit more than the 0.1 expected. So there's no pressure on the Fed in terms of inflation to even think about, becoming any, more hawkish. And with the economy so uncertain, there's no reason, in jobs week, the Fed is going to remain dovish for an extended period of time. That's good for equities. You're not going to have to worry about the Fed being a headwind anytime soon. So you've got the Fed being dovish, you've got the government's, economic stimulus packages more on the way. I think personally that the worst of the news is hitting us right now. Market already forecast that. Stock market went down 33% in 1 month. Think about that. 33% of the valuation of all the companies on our exchanges down. 33% in 1 month. The market discounted all of the news we're seeing right now. And I think the market right now on the way back up is discounting what's going to transpire and what we're going to see in economic news in the next 3, 6, 9 months. Now, if you disagree with the market, that's fine. I find it, usually not a good idea to ignore the market because I think it's one of the best leading economic indicators. But if you choose to do that, that's fine. 10-year Treasury yield, let me get an update here because it was down about 4 basis points. Now down 3 basis points, 0.65%. But this is what I was referring to. The last, week or two, we've seen the 10-year Treasury yield going up, getting through the 20-day. And yet when you look at the something like the XLF versus the S&P 500, we just keep going down, setting lows. And that's candlestick, which is usually not the way to look at price relative charts. Best way is to get a solid line. But you can see there, we're breaking down to new relative lows. So let's go back and again, look at that 10-year Treasury yield. And it's been trying to go higher. And that normally, if you look at history, when yields are rising, that normally is the formula for financials to outperform. Well, yields have been rising now for about 3-4 weeks. This isn't just 1 or 2 days. This has now been 3 to 4 weeks that overall we've been in an uptrend, and yet financials keep breaking down. I'm not quite sure what to think of that. I haven't come up with a reason why that's happening, to be honest. It's not a good thing. I would much rather see the financials performing better. So maybe you throw it in the camp of warning signs for the market. Maybe we've gone a little bit too far, too fast. Financials need to, maybe consolidate, maybe even move back down a little bit, test some recent lows, and then maybe they, get their support and start rising along with the 10-year Treasury yield. But for now, and maybe it's just financials, looking ahead saying, well, there's no reason to think the 10-year Treasury yield or any of the Treasury yields are going to go higher because, as I mentioned at the top of the show, the Fed has no reason to raise rates right now, and for quite a while probably. Now, while that's hurting financials, it's helping areas like technology and healthcare, which, where we're seeing a lot of companies that are doing really well during this pandemic, growing their earnings. And if you can grow your earnings in a market environment where rates are going to stay historically low and maybe even move lower, those earnings, that earnings growth becomes extremely valuable. And that's why many of these stocks are going straight up, and you just can't understand why. In my opinion, that's why. Because you're getting a lot of growth in some of these companies, a lot of future anticipated growth, because this pandemic isn't just going, the virus itself may go away, and hopefully it will go away when we get a vaccine or we get a treatment for it and so forth. But I'm not sure that this new paradigm is going to go away. I think that folks are kind of changing a little bit. Twitter came out, I think it was yesterday, and said all of its employees can continue to stay home and work from home. If we didn't have this pandemic, that would not have been the stance Twitter would have been taking 2 months ago. I think you're going to see more and more companies that have been forced into this, working from home and online collaboration. A lot more of these companies, I think, it's going to be more of the norm going forward. So that's part of the problem with real estate companies. What do you do if you're a real estate company, you own malls and you own office buildings, and and you've got more and more companies saying, hey, you know what, stay at home. The other side of that, the impact, is you got empty office buildings. You've got malls that are not going to have nearly as many people in them. So those companies that are depending on brick and mortar stores are going to be at a major disadvantage. Companies that have already have proven online strategies, they're going to be at a huge advantage. So anyway, I could go on and on, make just a show out of that. But let's keep moving. We got talking technically. I just want to show you one chart. Been talking about biotechs for quite some time. This was a group that did extremely well in the first few years of this secular bull market. And it wasn't that it did badly. And actually, I think, it's been sideways consolidating, basing for 5 years with higher lows and for the most part, equal highs. That's an ascending triangle off of a long-term move to the upside. I think we are breaking out here. If you look back into February, on the weekly chart here, we made a breakout above 2,200. We did it with a negative divergence. We failed to hold that breakout, ended up going back down and testing the low from December of 2018. And from there, we have just been shooting up, and volume has been pretty strong to support this advance. We've now made a breakout. This week, we almost hit 2,400. There's not a whole lot of doubt in my mind that this uptrend has begun. Now, if the market's weak, could we pull back, maybe get a 20-week test? Yeah, that would be about 10%. Biotechs can be extremely volatile, but I would want this group as part of my core strategy going forward if I was a longer-term investor, based on what I'm seeing on this chart. I love the weekly PPO coming off the center line, pointing straight up. That leads me to believe any test of that 20-week moving average would be a successful one. All right, let's keep moving. What else did I have for today? Okay, let's move into the seed. So the seed, what I wanted to do is look at the semiconductors. So here you've got semiconductors moving up very strong, 2016, 17 into early 2018. And then for the most part, about 18 months, we sideways consolidated. And I think we were starting a very big bullish move into the beginning of 2020 before this pandemic hit. Now you've got a lot of supply chain, with semiconductors over in Asia, especially in China. And as a result, this group was pounded at the outset here, where we saw a drop from 4,750 down to 3,000. That's roughly 1/3 in 5 weeks, 1/3 of its market cap in 5 weeks. But this group has bounced back really nicely, and I think looks good. So we know some of the big players. NVIDIA has been strong for a long time. You got AMD, Applied Materials, There have been some really good larger cap semiconductor companies, but what about small cap? What might work in a small cap environment? And so I went through and just pulled up a few of the small cap semiconductors that are doing pretty well over the last year and wanted to take a look at them. So let's just go through a few of them here. First one is ACM Research. This is a chart relative to semiconductors. So you can see going into early 2020, this stock was really flying throughout the pandemic, took a tumble, and now has just come roaring back to the upside. What does their chart look like? Well, their chart looks pretty good. Stock was at 35 a little over a week ago, and it just went up to 56 at the close yesterday with volume picking up. I think this one's gotten a lot, way ahead of itself. But when I'm looking at a pullback on a stock like this, if the market gets weak and ACMR pulls back with the market, don't forget this chart, because this is one that's showing tremendous relative strength over the past, 4 or 5 months. In fact, I think it would probably be good if we stretch this out so we get a little bit better sense. All right, so here's a 5-year. Of course, this one only goes back a couple of years. They just went public. But this has been a very strong performer versus the semiconductor index. And, when you look at your stocks, or you look at your performance, sometimes you say, well, I'm up X. That's not bad. I'm doing pretty well. But if you own a semiconductor and say you're up 12%, over the last year, but you look at the semiconductors and the semiconductors are up 20%, all of a sudden that 12% doesn't look very good, because the average of the index is outperforming the stock you own. So that's why we focus so much at Earnings Beats on relative strength, because we just don't want to be in good groups. We want the best stocks in the best groups. So when you look at these stocks, I think you're going to see, for the most part, these are small companies. So if small caps come roaring back, these are companies that are outperforming in an environment where small caps are lagging. So imagine if more and more money goes into small caps at some point down the road. These are companies you want to keep an eye on. So ACMR, I think, is one that I would consider certainly part of the seed, as I mentioned at the top of the show. How about, this is one you maybe have heard. I know it's been on our strong earnings chart list a few times. IPHI, which is Infi Corp. Look at the relative strength over the past 2 years and 3 months. So huge relative strength in IPHI. And if we come over here and look at the absolute chart, you'll see the breakout occurred back in April. And when everything was going down in March, look at the accumulation distribution. IPHI continues to remain a very strong stock. And if for some reason we get a market sell-off and you get this stock maybe back down to 20-day moving average, or maybe even, it's a volatile stock, could go lower than that. 85 to 90, I think, would be a steal almost on this stock if we were to get a sell-off. So if you're sitting in cash, or you've been raising cash and the market does take a tumble for a short period of time, this is one I'd have on my radar. Next up, MTSI. So MTSI was going down for quite a while, a couple of years. And just recently, and especially since that March low, this stock has just exploded relative to the semis. We know the semis have come up, but this is a stock that not only has been just wildly outperforming the semis, but it's also broken to a relative high now from the last 2 years. So something to at least be thinking about. If we look at the chart, the absolute chart on MTSI, we came off those lows and we're all the way back to where we were back in February. So we're pulling back now, but the AD line's been strong throughout this whole downtrend. You can see the AD line breaking out. So I think there's been accumulation here. Watch for this breakout. We could have a long-term uptrend. Maybe it's a pretty deep. The depth of that cup is pretty big, but maybe it's a cup with a little bit of a pullback here. I think that 20-day moving average, if you get the stock down around 28, that would seem to be a pretty good area for me based on the way it's been trading. ATOM. Another one that's been downtrending for a while, but all of a sudden, the last 5 or 6 months, it's been shooting higher. It just took out the relative highs back in June and July of 2019. And off of that March low is where a lot of the strength has come in. So what does Atom look like? Adam looks pretty good. Now, let me caution you. This breakout is really nice. I really like the breakout. The caution I'm going to say is the volume. I would never put this on one of our chart lists because we've got a lot of members, and I wouldn't want a lot of members getting into a stock that routinely can trade, 20, 30,000 shares in a day. But if this is something that, would interest you, I just find it interesting here. A lot of volume coming in on this big move to the upside, volume coming into this move, and then we break out yesterday with volume when the market's selling off. So I wanted to at least mention it. LSCC. This is Lattice. Lattice Semiconductor. Look at the strength here, relative strength now for the last 2 years. Just literally almost off the charts. Looking at the absolute chart, recently making a breakout. And again, through all the selling back in February and March, accumulation distribution was going up. That's a pretty good sign. And it's been a great signal for us the last couple of months. So nice break to the upside. We did have a false breakout yesterday, so it'll be interesting to see whether or not we resume this breakout today or if maybe we pull back. PPO looks strong though. I'd say the 20-day would be a pretty good area for entry here. All right, just two more for the seed. We're just sticking with semiconductors on this particular episode of the seed. Here is another big move up, 1.5 years relative strength you're seeing on POWI. So another stock that looks good on a relative basis, been strengthening. What's it look like on its absolute chart? Another one that's maybe a little bit challenging, not as bad as ATOM in terms of volume, but still fairly light. Looks like it averages over 200,000, at least the last few months it has. Now this one went down a little bit in AD with the recent move lower, and it hasn't really come flying back to the upside. As you can see, it's just kind of been more sideways. But I don't want to negate the possibility or negate the fact that the stock, if it makes a breakout and the volume is there, I would really like it. This is one of those situations where you might look at the AD line and say, well, it's not being accumulated, but it's a great relative performer to semiconductors, and it's sitting right near its 52-week high. Hard to argue that it's a bad stock just because the AD hasn't done exactly what we'd like to see. So I think POWI is one certainly to keep an eye on. CEVA, this is my last one. CEVA, now this one been in a downtrend for a while. In fact, set a new low in March. But since that March low, and I went and looked, I'm not a techie, so sometimes I look at the profile on some of these companies and I still don't know what the heck they do. But I did see 5G in their profile. So maybe the 5G folks are jumping on board here with CEVA. But the last 2 months, this has been a very strong move back to the upside. So I thought, well, let's take a look here on the absolute chart and see what's going on. And here you can see it. Look at this move back to the upside. Now there's a false breakout, reversing candle. And this is why when you've got an intraday breakout on a stock that's going up like this, if you're playing that breakout, you want to be really careful if the stock comes back down intraday and fails to hold that breakout. And you can see why. We were up to almost 37 on Monday. Yesterday, we closed at 32 and change. That's a big drop. And you can see, again, volume not very heavy on this stock. So it's not a huge volume play. But seeing that relative strength since the March bottom was worth at least mentioning here. Haven't closed below that 20-day throughout this move. So maybe a test of the 20-day would provide some opportunity. Anyhow, that is the end of the seed. That episode, if you like it, let me know. You can write in to me at tom@earningsbeats.com. I'd like to hear, what you think of some of these things when we try them. But, we just looked at the small companies, some of the small companies in semiconductors. I can do different groups if you like the segment. Next up, I don't trust you. So this is just looking at some charts and honestly just not trusting what I'm seeing. So Alta, Alta went down in March, tried to rally back. You can see that rally back got to about $230 and then really straight down. The accumulation distribution went down, and we've had a nice little rally from about 120 and change all the way up to 230 and change. So that's been, probably close to 100% rally back off the bottom. But look at the AD. AD has not come back up at all. Now, yesterday we get this big candle, red candle below the 20-day. I'm sorry, Alta, but I don't trust you. PLNT, Planet Fitness. Now, this one's just a little bit more of a fundamental thought. I'm a member of the gym, not Planet Fitness, but one of the others. And I have no interest in going back to a gym right now. I can't imagine there are a lot of people, I think they want their exercise, but I think they're doing it at home or finding other ways. I just don't think they want to get inside a building and with a bunch of people and exercise, especially when everyone's breathing heavy. You know, it's been proven that, you know, when you breathe heavy, you're putting out more of the virus particles. I have no interest in going into a gym. So I think gyms are up against it, number one, just from the start. But it seemed like this little uptrend was narrowing in a little wedge. And then we broke down yesterday, big volume. Notice that as we kept moving up, we had an initial pop here in the AD line. But as we kept moving up, we haven't been able to break back up again. Now we're moving to a new 2-month low on the AD line. I'm sorry, Planet Fitness, but I don't trust you. BMC, Vulcan Materials, big move down, dropped from 150 all the way to 65. Nice little move up. Look at that shooting star candle. That's why you got to respect those. Big move up, but failure with the shooting star candle on heavy volume. Even throughout this whole move to the upside, look at the AD line going back down. Could not get the breakout. Now we come back down just a couple days ago, closed at about a 6-week, 7-week low. Sorry, Vulcan Materials, I don't trust you. AN, Autonation, big move down all the way from 48 down to 20. It's been a nice ride back to the upside. Can't really complain there, but AD line's going down. We keep breaking out. I said, hey, price action is really where it's at. But I also mentioned that relative strength is important. I want you to look at Autonation on relative strength. So the specialty retailers have broken out on an absolute basis to a new high. Relative to the S&P 500, this has been one of the best areas. But Autonation, relative to the specialty retailers, continues to be in a downtrend. So this is one of those situations where if you got into Autonation, you're like, hey, I've done a really good job. I'm making money. Well, that's the good news. Bad news is you could have picked a lot of other specialty retailers and made more. So based on that, based on these big filled candles on increasing volume the last couple of days, AD line breaking down, sorry, Autonation, I don't trust you. Moving into earnings, let's talk a little bit about earnings. Don't have a whole lot of time, so I just want to give you a couple of these that are reacting pretty strongly today after very nice earnings reports. First one is PGNY. If we look over here, and I'm just going to pull it up here so we can see what's going on in pre-market. PGNY up 23% this morning to 25.23. On the chart that takes it up here into breakout mode, you might see a pullback to test 24. If it does and fails, that's a negative. If it opens at 25, comes down into the 23s, 22s, and reverses back up today, getting back through that open, that would be a very bullish candle. So I want to see where we go. But the AD line's been pretty strong on this one. So if we get a gap up, failure, and then reversal back to the upside, this would be an interesting candidate. Another one is PGTI. Must be something about the PGs today. But here, PGTI, if you look at the pre-market action, up 12%, 1098. Looking over here, 1098 would be above the high. Watch this. I always pay close attention to where we open. We've got closing resistance there at 1073, there at 1059. So if it opens above that 1073 level, I would take that as a positive on the stock. Again, a pullback and then reversal back up and break back above the open, that would be bullish for PGTI. All right, a couple upgrades, downgrades. We're going to probably run just a couple of minutes over here, but that's all right. ALGT. I'm on a much more strict time limit over at stock charts because they got to fit it into their TV schedule. Here at Earnings Beats, I usually go a little bit over. Upgrade, ALGT, Allegiant Travel. I'm sorry, I'm not buying into this upgrade. This stock's been under pressure. It's in that travel, airline group. Look at the AD line. I don't know. I always wonder when, a research firm comes out and upgrades and wonder if they need to get out of a position or something. Biggest conflict of interest in the stock market for a lot of these firms. Some of these firms have a research arm that are out telling you upgrades and downgrades, and then they have a market making unit that's taking the opposite side of the trade. How's that kosher? Makes no sense to me, but market doesn't, I don't think we'll ever see a change there. But anyway, ALGT was upgraded. CRL, now this one I do like. And I was mentioning this one back at the end of April when it was trying to make the breakout, pulled back at the 20-day, what finally made that breakout. And this one is in one of our, I think it's in our, maybe a character change portfolio. It's in one of our portfolios, but it has really exploded here. It's in a great group, and now it's, you know, followed suit to the upside. Accumulation distributions remain strong throughout. I think this one continues to go higher. I like the upgrade there. Downgrade was Ciena, CIEN, Ciena Corp. Look at this move to the upside. AD line was strong throughout this move to the downside. We just recently set a 52-week high, and you can see the stock down today at the open. We just opened. I think that could be an opportunity, actually. This is a strong-looking stock. Stock down 2.5% at the open. I would prefer maybe a trip below the 20 and then, you know, intraday and then come back up above the 20. I think that could be an opportunity to accumulate shares, build inventory for market makers. All right, final three you must see. I'm going to show you first TDC, Teradata. Don't like this one at all. Off the up, this move back to the upside, even though AD line's been moving higher. I see off of this downtrend a move up here, left shoulder, come back down here, neckline right around 22. Head goes up to 25.5, neckline at 22, bounce back up to 23 and change. And yesterday, on better than average volume, we break neckline 22. Unless the stock can get back through the 20-day moving average and hold it, I would be very skeptical. I think this one goes back down. The measurement, by the way, from 22 to 25.5, that's $3.50. Subtract that from 22, it's 18.5. Takes us right back down to test those lows. Next up, three you must see is FLR, Fluor Corp. Not liking this one either. Stock moved up, got a little bit of a bounce there in the AD line, but still way below where we were before. Yesterday, the volume picks up. We lose the 20-day moving average for the first time in over a month. I don't know. I just don't like FLR here. And the last one is EV. Financials, I said, financials have been really rough. I was going to say strong. They've been really weak. But Eaton Vance has actually performed pretty well. AD line wasn't horrible during March. I mean, it held the prior lows, trying to move up a little bit. This is one that maybe holds down around 32 if the market gets really weak. It's just been a better relative performer. It's in a weak group, but you know, if you're looking for maybe you know, the bright side or the silver lining in financials, EV would be one of those stocks. But let's see if it holds down around 32 if it gets down there. One last thing I want to mention, and that is on an hourly chart. I mentioned this, I think, yesterday during the Max Payne webinar. But I said yesterday, I wouldn't be surprised if we had a little bit of a movement to the upside early on, but that might be an opportunity to lessen the load because I think we got warning signs heading into option expiration on Friday and maybe even into next week. This is a period where if the market's going to go lower, it would not shock me. So I still believe we're in a secular bull market. I think eventually we go higher, but could we consolidate for a period of time? Could we see some selling and then a little bit of chop? Absolutely. So I'd be a little bit more careful. I got stopped out of a number of positions, actually all but one yesterday. And I'm going to probably sit in cash here for the next couple of days, unless the market just takes off and, you know, tells me, hey, you don't want to miss this next run. I think though, with options expiring, I'd be really surprised if that happens. Watch this 20-hour EMA. I think if we get up there and test it and roll back over and set a new low, that is probably the start of something that's going to be a little bit more significant, kind of like we saw here in April, maybe even here, or it could be even worse. So just be careful out there. Everybody have a great day. Be back tomorrow for Trading Places Live over at Stock Charts TV. Have a great day, everybody. Happy trading.